Our next guest is still finding broad-based opportunity both in and outside of tech. Let's bring back Ankur Crawford, Executive Vice President and Portfolio Manager at Alger. Welcome back.
Thanks for having me.
Let me just get your first view here, because the bears don't want to go away, okay? And they don't think they have to, because they think that the bulls have this false hope that all is good and that the rest of the year is going to be just fine. So what's your view on that?
I think let's put in perspective of where we started the year. We started the year with the bears expecting the S&P to earn $180 to $190. That number is now looking like $220, and the number's rising. As we go through Q2 earnings, it is highly likely that we actually get revisions upwards to that number, not downwards. As we look forward to 2024, we see a growth year instead of a down year. So, you know, I think we have to at least consider that we're coming through this without too much damage. In the last 6 months, we've seen a banking crisis. It hasn't really affected the market. The consumer has been slowing, hasn't really affected the market. Numbers are going up. You know, you've seen a brand new theme with this Gen AI that can really drive the next few years of earnings.
You sound bullish. You sound like you're a bull.
I suppose I am. And in part, if you look at the valuations in the market.
Are they justified?
Well, OK, let's take Meta, for example. Meta only trades at a 15 or 17 multiple on street earnings on next year. Is that aggressive? I don't necessarily think it is.
Well, what if I take your Meta and I show you an Apple and I say, OK, that's 30 times. Is that justified?
Yeah, so Apple is a little bit of a different beast. I think a former guest that you had on was talking about how given the liquidity crunch that we're seeing in the market, there's this rush to these mega caps that actually generate liquidity. They don't need to take on the debt. I think there's a little bit of that going on. But if you look at the profile for Apple, Apple's numbers haven't actually come down that much.
Microsoft's at 33.5 times. Is that justified?
And Microsoft's numbers for 2024 may actually end up going up, just like we saw for NVIDIA, in part because they're seeing so much this insatiable demand for Gen AI and AI that, you know, I think we have to at least entertain the possibility that numbers can still go up.
See, that's what the bears seem unwilling to come to grips with, is that maybe their expectations of earnings falling off a cliff are going to be wrong. And they still think that all of this is going to come home to roost in the second half of the year, that earnings expectations are going to disappoint. They just haven't yet. For, you know, everything you said is right.
And I would remind you that in the beginning of this year, the bears were saying the same thing for the first half of this year. So if it comes to roost, maybe it's in, 2024, and we still have another, 9 months of earnings revisions upwards.
What about areas outside of tech? Sort of tech dominates everything, and it's a large part of what you do as portfolio manager, obviously. But what other areas are there opportunities in, as we teased and said you thought there were?
Yeah, so I think as we inch closer to 2024, this becomes very much a stock picker's market, and in part because you have to suss out who are the beneficiaries of certain trends and what trends don't you want to be part of. So, for example, in industrial world, as we go into 2024, we have the tailwinds of the Inflation Reduction Act, or all the reshoring, the CHIPS Act starting to come to fruition, the Jobs Act that was enabled in 2021. The funds start to flow in 2024. You have data center growth. All this Gen AI is going to, the demand for data centers and building of data centers, the power related to the data centers. So you want to actually be part of some of that cyclical, that cyclical bent in the market.
Martin Marietta Materials, does that fall under one of your picks?
It does, and it kind of feeds into these same trends. It is absolutely not a Gen AI story, but it is a story of basically they're a stone quarry. They sell cement and stone and rocks, and it's not really that sexy. But it enables the building of America, the reshoring, the building of data centers.